Are we in an AI bubble or not? This is what we're going to talk about today. I'm going to share with you a little bit about my story, compare the AI bubble that we may or may not be in, compare that with the dot-com bubble that I went through, and kind of like I can really kind of explain to you kind of what it feels like and how different and how similar it is. And finally, I'm going to show you and tell you how you can protect yourself against this potential bubble. Now let's get started. So in 1998, I joined a company that had gone IPO like only a few years earlier, and I was an employee like 500 or 800 or something like that, and was awarded stock options. I didn't know what stock options were, but if you don't know, a stock option is the company is basically giving you kind of like a piece of virtual paper saying that you can buy the stock at a specific price. So let's say you get hired by this company and the stock price at that point is $25. They're going to say, well, now I'm going to give you a stock options to buy the stock at $25. But during that time, the stock price goes up and up and up. And then, so when the stock price is at $50, then you could exercise your right to buy the stock at $25 and then sell it at 50 the same day. So you make $25 on the stock option. So this is what I got, and I didn't really know exactly what it meant and how lucrative it would be, how much money I would be potentially making out of that. So in 2000, I moved to Silicon Valley in San Francisco Bay Area and talked to a financial advisor. It was 2000, I didn't know anybody there. It was a new tax system. And so I talked to my financial advisor. I said, this is great. You have a great portfolio. What you need to do is diversify it. And his idea of diversification was to buy some mutual fund, hire a money manager to basically invest this money into different stocks, but everything was in the stock market. So I did that, and then the dot-com bubble crashed at that point. And when I say crash, I mean the whole stock market went down. Some stocks were obviously worse than others, but everybody at that point came to the realization that this is a bubble. There's lots of companies out there that are not making money, and they're never going to make money. And then all of a sudden, over a couple of months, then they decided that this is all these stocks that we had given this great valuation, they're worthless now. And so the whole stock market kind of like collapsed at that point. And I was stuck with some stock options that were basically worthless anymore. And I had the other stocks that I had, the money that I had invested in other stocks also went down the crap, and was pretty much, I was basically back to square one. So when I'm telling you this story, I mean, and I'm looking at the situation that we are in right now, I could definitely feel and see that there are some similarities. It feels very, very similar. And I'm going to go through kind of like what I'm looking at and where the similarities are, and but also some of the differences as well. And kind of try to figure out, like, are we there? Are we in a bubble? I think people's eyes are a little bit more open than they were in the dot-com era. So the first thing about the AI bubble that I'm seeing is the sense of euphoria, right? So in the dot-com era, the thing was like internet is going to change everything. And then now we're in the AI, and it says AI is going to change everything. It's the same thing, right? And then, nobody's going to have a job anymore. The AI is going to do all the work. They're going to be smarter than us, etc. The thing is that the idea is not wrong necessarily. The thing is the timing. So the internet obviously did change everything, and it continues to change things, but it took a lot longer for that to happen, for that to be everywhere, and we still have some ways to go, by the way. And now we're kind of in the same situation here. Now AI is going to change everything. That may be right, but it doesn't mean it's going to happen in the next 2 years or 3 years, like they're saying. It's probably going to be faster than internet because things are accelerating faster, but this change is going to happen a lot slower than we think. And maybe this model that we have for AI it may not be the right model. There might be another model that needs to be done in order to really have AI. work for us. So I don't know. The next thing that happened in the dot-com era is like massive capital inflows. So when people saw this, they were just throwing money at it. They would throw money at anything that moved, that was even remotely related to the internet. The VC funding, as you see here on the slide, is like it was went from $1 billion in 1995 to $100 billion in 2000. The AI investment now in 2025, I think we're actually over $300 billion that have been invested in 2025 in AI kind of projects and data centers. So right now, this is where the money is chasing the infrastructure, and it's chasing a bunch of projects that are just giving some promises instead of actual business plan that are going to show profitability and sustainability. People are throwing a lot of things out the window at this time. So I think a lot of the business models that we're seeing is also kind of unsustainable. In the dot-com era, a lot of the startups were focused on eyeballs, how much attention they got, how many clicks. Everything was about that, and they didn't care about revenue, certainly didn't care about profit. Many companies, never made money. If you think of Webvan, eToys, so all that. And again, many startups today, they're building a wrapper around GPT. They're not even building their own language model or anything like that, or AI kind of model. They're just putting a wrapper around it and then asking ChatGPT. I mean, is that how you want to start a business by doing this? It's a little bit, when you start a business, you want to have some kind of moat, some kind of barrier to entry, some kind of advantage. But when you're building a wrapper around GPT, you don't have the advantage. ChatGPT or OpenAI has the advantage in that case. If they want to increase the price, then you're forced to increase the price, etc. So you don't have a moat, you don't have a barrier to entry, and this is not going to work well in the end. Infrastructure arms race, dot-com era, I mean, it was all about telecom fiber optics. So they spend millions and millions of dollars building fiber optics. Maybe you don't remember, but WorldCom, Global Crossing, they built a ton of fiber optics, and about half of it is still not used today. That was in 2000. It's still not used today. This shows you kind of like the amount of overbuilt that was done in the fiber networks. And on the other hand, we still have people in some areas of the United States that don't have access to the internet. So you build the infrastructure for what? When we look at AI, now everything is about building these GPU clusters and data centers and all of that. And a lot of these GPU, so right now is the GPU chip is the thing. This is why NVIDIA is like skyrocketing. But these GPU chips, their lifetime is going to be about a couple of years. In a couple of years, all these GPUs are going to have to be upgraded to the newest GPU. That's what the prediction is. So the projection is. So, this is going to be a big problem. You're spending a lot of money on these GPU clusters, and you have to make your money in 2 years. Otherwise, because you're going to have to spend again on rebuilding all these GPU clusters in a couple of years. So lots of money being spent in that. The thing that kind of worries me a little bit is now we have the big players like Oracle, etc., Amazon, and Microsoft that are building these data centers. And these companies are profitable. They have money in the bank. But as an investor of Oracle or as an investor of Microsoft and Amazon, I would be a little bit worried about how they're spending my money, the cash that they have in the bank. That's kind of like that's how I valued the company, because they have that cash in the bank. Now they're going to spend it into these kinds of projects that I'm not sure there's going to be a return for. So as an investor, it kind of worries you also. So then we have the IPO and speculation going on. So not as much as we've seen in the dot-com era. In dot-com era, we saw like for 400 IPOs in 1999 alone. And it's just, a lot of them were just like slideware, a PowerPoint presentation showing them how the application is going to work or whatever. And didn't even mention how they're going to make money. They're just talking about how they're going to get eyeballs and attention. Now we have a lot of SPACs. The SPACs are back. These are basically companies that are ready to go to invest in one of those AI projects or whatever. A lot of these are kind of positioning themselves in the stock market with, again, little more than demos and hypes and wrappers around another solution like ChatGPT. Then we have the labor and productivity paradox. So, I mean, we've been talking about how AI is going to change productivity, how it's going to change, it's going to replace workers, etc. We had the same thing with the dot-com era too, like how they promised like huge efficiency gains, and we did have huge efficiency gains, but it took years for that to be realized. Now, the same paradox is playing right now with AI. So huge investments, lots of companies. There was actually a MIT research that said that. And then there's a whole labor and productivity paradox. During the dot-com era, the internet was going to change everything. It's going to make everybody very productive. So many jobs are going to be completely obsolete. And, a lot of it was true, but it took a long time for this to actually show actual results. So AI is kind of the same thing right now. So where they're promising that so many jobs are going to disappear, and we hear Amazon actually getting rid of employees so that they can make more room for robots and AI robots. It's no different than the industrialization era. But MIT has done some research, and they showed that 95% of these AI projects are actually showing negative returns. There was also some studies saying that AI is actually reducing efficiency and productivity in software developers, not increasing the productivity. So there's a bunch of stuff going on there where at the moment it's not showing any kind of productivity gains. I'm sure it's going to happen in the future, but we're not there yet. And I think people are banking on the fact that this is going to happen very, very quickly, but I don't think it's going to happen right away. So then we have the whole easy money. So whenever we have these projects, so when you have a lot of money coming in and a lot of interest and people are looking for projects to put their money towards, then it kind of it also becomes some kind of moral hazard. In the dot-com era, they didn't care about anything else. They didn't care about the profit. They were just looking at eyeballs. So people tended to create slideware, create all kinds of projects just to get to the money. So they didn't really have a real sense of solving a problem, of building a business or anything like that. All they were after is getting funded and then being able to enjoy the funding at that point and give themselves some salary. And AI is no different right now. There's a lot of projects that are simply slideware, wrappers around existing solution to make things look good. But in fact, there's potentially some people out there that all they're after is some kind of, they just want to have some money. I could create a project tomorrow and say, this is an AI project that's going to help people do real estate and it's going to analyze all these things. I can put some slideware together and go for funding. And, I might get some funding from people to do that. And I may not be able to deliver, or I may not be willing to deliver. I just want to get the money so that I can pretend that I'm working on this thing. So this is kind of like moral hazard when it's too much easy money, and when people are not looking at the metrics and they're not being careful about where they invest their money. This is what happens. And I think this is the kind of environment that we're in right now. Part of it is that new economy fallacy, where during the dot-com era, it says, well, don't look at, this is the old way of looking at it. This is not how you value an internet company. Forget about profit, forget about revenue. All you want is eyeballs, etc. And that's what matters. And we're saying the same thing now with AI. And say, don't worry that we're losing so much money right now, because eventually, this is what's going to happen. It's going to be fantastic. We're going to make way more money than ever. And this whole concept of ignore what you know, and we know better, you don't know enough, you are, all that kind of stuff, and you don't have a vision for what's going on. So all these things, no, you need to pay attention to what's going on. You need to look at the numbers. You need to ask the right questions. And whenever someone is telling you, oh, don't ask so many questions, you don't know enough about the technology, you don't know enough about this, just pay attention. We're already seeing some cracks to this to this AI bubble. So here, despite $44 billion invested in AI startups in the first half of 2025, a new MIT report reveals that 95% of these generative AI business efforts are failing and only 5% achieving meaningful revenue growth. We're also seeing a lot of cross sales between big players out there, especially NVIDIA and OpenAI, where they're investing in some companies, and that company in exchange is buying NVIDIA chips. It looks like the NVIDIA chips are doing great, but a lot of these sales are actually generated by NVIDIA itself because they invested in a company and then forcing them to buy their chip. So this is something is a little bit, if some of these projects don't pan out, there is a risk that NVIDIA's financials are not going to look that good, and that might cause some ripples in the stock market. And that could burst the bubble, seeing things like that. We had a similar situation in .com, especially near the end. They were desperate to increase sales and show sales, and there was a lot of these cross sales deal. I'm going to buy your software if you buy my software, and the software sat untouched into the enterprise, the company that bought it. I've seen a lot of those software that we implemented. They were in our system, and we didn't even use them. AI is not we can't let it loose. We have already seen some pretty bad behavior from AI, from the Mecha Hitler, from Grok, so all these things, and also how AI has actually learned to lie in some circumstances. One of them was about sales agents that were actually making up software features in order to improve their sales. They were focused on increasing sales, and then the sales agent actually were promising things that they were not supposed to and coming up with features that didn't really exist. So we also all heard about AI hallucinations. If you've used AI or ChatGPT or DeepSeek or whatever, I mean, you've seen these things where there's just like, this is just not true. Like, where are you coming with these ideas, these crazy ideas? So there's a lot of these hallucinations that are coming along, and then also, some kind of like circular thinking, because AI that we have currently is not really thinking. It's more like a pattern recognition, language. It's more like predicting what words they need to put together in order to answer questions, and not so much about thinking about the concepts for what we're asking. So which brings the question, maybe we're even in the wrong model. So there are some people that are looking at this and say, well, this is not, language recognition is not really what we need to do. We need to have something that actually thinks and learns concepts and being able to solve complex problems and extrapolate. Currently, the current model just extrapolates on the information it has, but it can't go and come up with something completely new and outside and extrapolate outside the data set. So with all these cracks, I'm not saying that this is going to explode into a massive bubble, but nobody can predict the future. I can't predict the future, but it's not as clear and rosy and as hyped up as it is. So I think it's important to be careful, because there is a non-zero probability that the stock market will correct, will go down, and that this bubble is either going to explode and blow up, or is going to deflate, and then it's going to be at what speed is that going to deflate. So how do you protect yourself? Or even like take advantage of this, right? So you have to hedge your bets. This is something that's very important, and you have to diversify. And what I learned during the .com era is that I was diversified, but everything was in the stock market. And what's important is you need to diversify into different asset classes. That is what is important. If you listen to Wall Street, they're going to tell you to put everything on the stock market, but that's not the right answer. And then Wall Street is also telling you that these things, apartment buildings and real estate, is an alternative investments, even though Real estate was there way before the stock market. Real estate has a lot of advantages. You have cash flow, positive cash flow. All your bills are paid, your mortgage is paid, and you still have cash coming into your bank account. You have appreciation. You have leverage that's going to maximize that appreciation and multiply that appreciation, and then maximize your cash flow as well, because it's going to allow you to buy multiple properties. The tenants are paying basically the mortgage, so you have equity pay down as the years go by. You have significant tax advantages in terms of depreciation, various deductions. Also, if you invest in opportunity zone or whatnot, you have a lot of tax advantages coming from the city or the state to help you with your property. And then you have capital gain deferment like 1031 exchange. The bottom line is that this is a tangible asset. It's not a paper asset. It has real intrinsic value. It provides a service to the community and its inhabitant. And the other twist to this is that you control this asset, and that means you can add value, you can do constructions to improve the value, increase the rent, and they basically increase the value of that property. This is why real estate rentals is so powerful, and this is why I recommend it to everybody. So if you want to know how to get started investing in real estate, go to investorgameplan.com, where you can download the Investor Game Plan Starter Kit. And you can also book a call with me so that we can discuss how my family can help you and your family invest in real estate. Till then, see you next time.